quick question. How much money do you have sitting in your savings account right now? $1,000, $5,000, maybe $10,000 or more. Whatever the number is, I need you to hear what I'm about to say, because most people don't find out until it's too late. That money in your savings account, it's shrinking right now, today, this very second, while you sleep. Not because someone stole it, not because the market crashed, but because of something your bank does quietly every single month. And they are absolutely counting on you never noticing. Your bank, Chase, Wells Fargo, Bank of America, is paying you 0.38% interest on your savings. 0.38. Meanwhile, inflation right now is running at 3.8%. You do that math. You are losing 3.4% of your money's value every single year on money you thought was safe, on money you thought was growing. Let me introduce you to Ryan, 29 years old, software engineer in Denver, Colorado. Makes good money, around $78,000 a year after taxes. Ryan is genuinely responsible with money. He doesn't blow paychecks, he saves consistently. Every month, a piece of his salary goes straight into savings. 3 years ago, Ryan opened the savings account at Chase. He put in $15,000. His goal was simple. Emergency fund, some peace of mind, maybe save up for a down payment on a place someday. Chase told him his money was safe. And it was. It just wasn't doing what he thought it was doing. 3 years passed. Ryan never touched that money. He was proud of himself. Then, one Tuesday evening, sitting at his kitchen table, he actually did the math for the first time. He opened the compound interest calculator on his laptop. He typed in $15,000. He typed in 0.38%. He pressed calculate. In 3 years, Chase had paid Ryan a grand total of $171. $171 on $15,000. Kept safely in a bank for 3 years. But here's what really got him. During those same 3 years, inflation had quietly eaten away $1,530 worth of his money's purchasing power. He didn't lose money from his account. He still had $15,171 in there. But what that money could actually buy, $1,359 less than when he first put it in. The account went up. His wealth went down. That's the trap. Okay, let me explain exactly what's happening here, because this is something they never taught us in school. Inflation is the reason that $20 in 2019 only buys what $16 buys today. Every single year, the cost of groceries, rent, gas, medicine, it all goes up. And if your money isn't growing at least as fast as inflation, you're getting poorer, silently. Think of it this way. Imagine you're on a moving walkway at an airport. The walkway is inflation. It's always moving forward. If you stand still, you fall behind. If you walk slow, you still fall behind. You have to walk faster than the walkway just to stay in the same place. Your savings account, it's making you stand still, while inflation keeps moving. Here's what $10,000 looks like in a Chase savings account at 0.38% over 10 years. After a decade of faithfully saving, you'd have $10,386. That sounds fine, right? Now, here's what inflation did to your purchasing power over those same 10 years. That $10,000 now only buys what $6,800 would buy today. You didn't lose money. You lost the ability to use that money the same way. And here's the thing that should make you angry. Your bank knows this. Chase knows what inflation is running at. Wells Fargo's economists track this every single day. Bank of America has entire departments dedicated to studying this. They know you're losing purchasing power. They just don't tell you, because the lower your savings rate, the more money they make. Let me hit you with the real numbers now. The national average savings account rate at big banks right now, 0.38% APY. Some accounts, like basic Chase savings, pay as low as 0.01%. 0.01%. That means on $10,000, you earn $1 per year. $1. Happy birthday from Chase. Now, here's the other side of that number. Banks are lending your money out to car buyers and mortgage holders at 7 to 8% interest. They borrow your money at 0.38%. They lend it out at 7%. That difference, that gap, is called the net interest margin. And in 2024, the top 4 U.S. banks made over $200 billion from it. Your money, their profit. And I want you to think about something. There are 130 million American households. If each one has just $10,000 in a low-yield savings account, that's $1.3 trillion sitting in accounts earning almost nothing. That's not a coincidence. That's a system designed to keep your money flowing to them instead of growing for you. And the most painful part? The fix is so simple. It takes about 10 minutes. There's zero additional risk. Your money stays FDIC insured, same as Chase, same as Wells Fargo. The government still protects it up to $250,000. And yet, most Americans still don't know this option exists. So let me show you exactly what it is. Before I show you the solution, I want you to understand exactly why this is happening. Because Chase and Wells Fargo aren't evil companies. They're just operating a very smart business. And right now, you're not their customer. You're their product. Big banks have massive overhead costs. Physical branches on every street corner, thousands of employees, free checking accounts, free debit cards, free ATMs. All of that has to be paid for somehow. And the way they pay for it is by paying you as little as possible on your savings while charging borrowers as much as possible on loans. It's not personal, it's just their business model. And here's the inertia trap on top of that. Most Americans open their savings account at whatever bank their parents used, or whatever bank had a branch near their college. And they never switch, because switching feels complicated, because nobody explained there was a better option. That's the real trap. Not the rate itself. It's the fact that nobody ever told you to look. Okay, here's what you need to know. There is a type of savings account called a high-yield savings account, or HYSA. They work exactly like a normal savings account. Your money is FDIC insured up to $250,000. Same protection. You can deposit and withdraw anytime. The only difference, the interest rate. Right now in 2025 and 2026, some of the best high-yield savings accounts are paying 4.4% to 4.5% APY. That's more than 10 times what Chase is paying you. And they're offered by FDIC-insured online banks, Basque Bank, Bread Financial, Betterment, Marcus by Goldman Sachs. These aren't sketchy companies. These are fully regulated U.S. financial institutions. Let me show you what this means in real dollars. Ryan's $15,000 at Chase at 0.38% earned $171 in 3 years. That same $15,000 in a Basque Bank HYSA at 4.5% would have earned $2,040 in 3 years. Same money, same safety, same FDIC protection, 12 times more interest. The only thing that changed was where the account was. And opening one takes about 10 minutes online. You don't close your Chase account. You don't move all your money at once. You simply open a HYSA alongside it. Transfer your savings over, keep a small buffer at your main bank for everyday transactions. Done. That's it. That's the entire move. One more thing before we wrap. If you have more than $250,000 in savings, split it across 2 or 3 different HYSA accounts at different banks. Each one is FDIC insured separately. Your money stays fully protected. So, Ryan, after that Tuesday night at his kitchen table, he spent 12 minutes opening a Basque Bank HYSA. He transferred his $15,000 the next morning. 3 months later, he'd already earned more interest than Chase had paid him in 3 years. He texted his sister that same week and told her to do the same thing. Ryan's money is still doing the same job. Emergency fund, safety net. It's still protected, still accessible. The only thing that changed is it's now actually growing faster than inflation. He went from earning $57 a year on that $15,000 to earning $675 a year. No risk added, no complicated investing. Just move the money to a better account. If you're watching this right now and you have money sitting in a basic savings account at a big bank, this is your Tuesday night moment. Pull out your phone, search high yield savings account. Compare the rates. Takes 10 minutes. That's all Ryan did, and his money has been working harder for him ever since. Share this with someone who has money sitting in a big bank account doing nothing. They'll thank you later. And next week, I'm going to show you the car loan trap, because 80% of Americans are overpaying on their car, and most of them have no idea how much. Subscribe so you're there when that drops. I'll see you then.